Okay. So now you can see that it has shows all the instruments we are going to be trading. All right. So never mind. So we're going to come back here. So I've just logged in to show you instruments and how we are going to be trading. Right. So, but before we trade, we are going to go to, so before we trade, we are going to go to, okay, before we actually trade, we will have to move to trading view, which is a tool. Even though we are going to be doing live trading with you, you still need to understand that aspect. Now, for you to get that example, let me just share page with you right now. You go to your dashboard, your account, right? And you go to education. And here you go. So go to education, click on seminar. When you click on seminar, and then you click on tools. Then on tools, you're going to see trading view chart. All right. So you click on trading view chart. So there you come, it's going to give you something like this. Now, the first thing you want to do is very, very simple. Zoom, I have some layout here, no problem. So you first thing you want to do is to create what we call layout. You create your own layout. But before we create our own layout, it's very important that we check other things. So to create your layout, look at this first instrument here. Click on it so that we can go to syntax. Then when you click on syntax, you want to wipe off this so that you can see the instrument of synthetics. So good enough, I'll just start from vol 20, but you are having a small account. The first you need to be trading are more of, if you're having $150, the instrument I would recommend for you to be trading are not those vols, but flips. So like flip 2, 3, 4, 5. They're okay for you. So let's take flip 2. I just want to experiment. Now, the next thing you are going to have this timing. So you probably want to go to 1 day first, because as a day trader, you want to go to what? 1 day. And this thing I'm showing you is very simple so that you can watch the video again and again. So if this is the instrument I'm going to be interested in trading, so the first thing, or let's say 2 or 3 of similar instrument. So first thing you are going to do is that you are going to map it. We call it top-down analysis. Now look up here. You see this flip. You see day. You see, place your candle cursor, and it says candles. You click on that candles, change into line. You see this one. It's a trend line. So now you are going to click on the arrow in the front, and then click on horizontal. And then find the top of the market. So where I change it to black, and another thing, this I change this peaks to 4. I want to make it very thick. You will see what I'm doing now, and I locate the floor, which is the bottom. Then, so the next thing is I want to be identify key levels, areas where market have touched before, return again, and all of that. So I'm just doing this a holistic trading strategy, irrespective of the market, right? So I'm just trying to get those key levels, right? So let's say here, yes, there's a key level. Look at this, a touch point, this is a touch point. This touch through, no problem. So then let's go again. I'm going to find an area here. Yes. This is a touch, this is a touch, this is a touch through, no problem. This is at the key level where the market even is now. So let's go again. So let's identify this. This is a touch, this is a touch. So if we say we should adjust it up, we have much touch than that place here. So let's pick to this. How many touch that are reasonable and of recent? So I think we should be good where we paste it. Right? If you want to learn more about this, you can subscribe to our trading and training course. It's not expensive. So to perfect all of this I'm just showing to you. So now we are okay. So very simple. So we can change the line chart now back to candle. You can see now we have gotten some important stuff. Now, so we want to actually trade. You can see that this guy is actually on the upside. It has been going down. Now I'm trying to go up today. So there's something you need to do. You now need to save. So let me save it. So save it with your name. All right. So my name is Mola. So I can call it Mola Charts. Okay. Mola Charts. You can see now it's there. So I think, so Mola Chart, anything you do, you must always save. If I say, let me load, do I have any chart here before? No. So this is the Mola chart. And you can see what I have done. So they're very simple. And I want to trade. Very simple. I want to trade. So every day as I come, I'm going to open my chart and go to daily to see where the market is presently at. So you can see this market to be crashing down, but it got here and was pulling back. So I have seen that on a daily, it's like you want to be bullish because this is a green candle, bullish candle, and all of that. How long will it go? So let me go to 4 hours. This is now doing top-down analysis to actually see the trend. So this market has been trending down. How do you know? So we are going to take our trend line. Okay, so I take my trend line, look at it from here to here, was actually what? A downtrend. Okay, sometime I just clone it. Okay, so this is 4 hour time frame. So this market had been going down and now I want to record an uptrend. Reason being that this is a low and this, so let's go to 1 hour. Now the next thing you can do in 1 hour is simple. What you do in 1 hour is that you want to mark major area of this market. So since this is 1 hour, so the first place this market came from is actually this region here, down here. So I am going to use a zone to mark it out so that I can see probably if the market will return back just like another block and what they call demand zone. So now, if that is the case, I actually want to trade this market. So where should I go from here? So there was a resistance that was here before. So I will do the same thing, probably here. So there's so many liquidity ahead here, but let's take the closest. So I take the closest. So let's see, what do we do? So we have to wait for this market to grab this liquidity and sell down here. And but there are two major points here. This is a key level. So if you grab liquidity and sell down, you want to be shorting. And that's what going to make me go to 15 minutes. Good. So at 15 minutes, you can see a small scene, right? So this is 15 minutes. So we have to wait for a grab over here before we can. So as it is now, can I enter this market? The answer is actually no, but there are other confirmation you want to use because normally as a day trader, your entry time is 5 minutes and 1 minute. It's kappa rather. So if you look at this 5 minutes now, so there's something again I do. I put in what we call a session break. So I have to right click and then when I right click, I go to settings, Canvas, or event in your case. I click on session break. I actually want to see where the day began from, right? So it's obvious that the day began from here, the new day from this point. So invariably, this market probably the way it's struggling to go up, you're going to come down. But remember, this must I actually face this? Once I didn't see a good setup, I don't bother myself. So let's now look for momentum instrument and trend instrument that will help us. Are we actually strong, continue to go up or down? Then there you are going to use EMA. So I click on it twice majorly or 3 times depending. Then I look for either MACD or RSI. Okay, this is a momentum indicator. So now what actually using this indicator for? So I'm going to go to settings of this indicator and I change this guy to 200. While the style, I use red, color red, and I make it thicker. And I take off all of this and I click OK. Then I go to the second one, right? I go to the second one. So I go to the settings. Okay, so let's save it because the network is good. So I go to settings. So input, I change it to 50. And there I go and I change it to green. Most time I love the color green. Signaling, so I take off all of this. And so this color green, I make it second thicker. Or probably just this first one. I don't want it to be too obvious, so I can even make it tiny, right? So I click OK. So now there we go. So my RSI, there are things I can do on it. I go to the setting of my RSI. So this guy, I change it to a line, and then I actually change the color to red, which is the upper level, and I make it very thick, right? So I go to the center, so I make it thicker, right? And I go to this, I go to the green, say green, say gold, okay? And I put it online, right? So I need to make it thicker, just like the other one. So very simple, right? So I remove all this label, and then, so let's go. I go to the input again, sorry, the style, the same, and I take out what we call background, and I click OK. Right, so I've done this basically. So this line, normally I make it thicker. That's one of the things I do. So let me save it, okay? So one of the things is that sometimes your network is not too sound, going to give a kind of thing. So once you refresh, it will go back to the fresh page. So you click here, click on load, and look for the chart you save. So you can see now. So I want to actually reset this. So this style, this I normally change it to green and a bit thicker. Something thick like this, or sometimes at the medium, and I click OK. All right. So now I've done this basic. So what use these indicators for are very simple. To identify some kind of divergence, to identify some kinds of momentum, and all of that. So now this market is actually an uptrend, right? So we'll go to 15 minutes, which is still like a trigger for you. So you can see that this is an uptrend. So, but sometimes it's sluggish for me. I probably don't want to even go into this because number one is sluggish for me. But let's go into 1 hour, like we said, that we have marked those point to point. So we expect that this guy could actually come here, grab this liquidity and sell back, or just continue to go up. If that's the case, assuming I want to enter this trade, though I come late, so there will do what? So I go to my 5 minutes. Remember, 5 minutes or 1 minute, and I locate a proper entry. Now, one of the things about 50 moving average is this. When you are in an uptrend, you take trade when the market return back to the 50 moving average. So that means ordinarily, though this trade is slow, so I click on long, and probably you want to enter when the market actually came down here. So, but let's say I'm entering here, which is not perfect. So my stop loss is going to be in the immediate swing low, which is here. Okay. Then your take profit probably 1:2. If we say 1:2, that means we are going here. So let me go to my account and see if I can just take an entry, for example, but this is not a perfect trade for me anyway. So I'm going to go back and check other ones. So let's quickly go. So I will share the next page here. So here we go. So let's go. I'm going to, remember we have done the analysis that we want to buy this guy. So here we go for okay. So very simple. So here we are on this. So now we want to enter a trade. Oh, Bull 20. So you can see we're actually almost late. So, but nevertheless, let me just enter to show you. So because look at it, this on 15 minutes. If I go 5 minutes now, oh my word. Can you see how we delayed? You see how we delayed, right? We delayed, right? So probably I'm supposed to allow it to correct back, but we actually delayed. So I'm going to use very small lot size. So I go to trade and I locate that for 20. Luckily enough for us, that's what's there. I'm going to use 0.01. Okay. So I am buying. Okay. Now, you know, I come late now, right? So since I'm buying and I come late, on my setup was actually that my stop loss, we're going to go to the page later, that my stop loss will be 107.461. 107.461. That's 109 times, so 107.461. So what I do is that, look at it, you press and hold down and click on modify, and also stop loss 107, right, 461 as my stop loss. So my take profit actually came late, unlike when we're supposed to enter. So my take profit could be 107,863. 107,863. Oh, say, does that mean the market has actually gone up? Oh, maybe it has come down. And say I can't put my stop loss in that place. Excuse me. Okay, so let me just go down because this trade was actually not the trade that I was supposed to enter earlier. So let's go. My stop loss at 107,356. 107,356. What's going on? What do you want me to use as a stop loss? 107,282. That's serious. I'm not this type. So probably for me, I may just leave it because I don't want to set a stop loss that unrealistic. Keep complaining that okay, so nevertheless, so let me look at my take profit. Probably maybe the market has come down so much. I hope I'm on vol 20. Oh, big mistake, big mistake. I'm on the wrong market. I'm checking a different market. So we're actually on profit. So we have to, vol 2 was what we're supposed to enter. So, oh my goodness. And the vol 2 is already running. So I went and entered vol 20 instead of vol 2. So the vol 2 now are Flix 2. Flip 2 was the market where to enter. And we have missed the entry anyway. Okay, is 2 that were to enter. So you can see how some mistake can be made. So it was this supposed to enter. So let me just enter anyway. So I've entered flip 2. So, and we said, okay, so let's look at where I entered from. 107,597. 107,597. So almost that region. So, and I say the stop loss will be at 107,454. 107,454. Okay. 107,454. Take profit. We said take profit will be at 107,863. 107,863. And I click OK. Okay, so you can see it's on profit, right? So let's look at it on the chart. So you can see where we entered from, see where we kept our stop loss. Where we entered from, we ought to have entered earlier. So, but we know we're on the wrong path. We're on the wrong path. You can see it's actually moving. And then we say, okay, thank you. So we are at loss here now. You can see that one I entered wrongly, even though we're in profit at the point. You can see this was not the market I had wanted to enter to, but I enter on error, right? I entered on error. So once he can give me back my money, I will exit. So this one is already running on profit. And so all I do is to watch it grow. So once it gets to a profit level, right, or it has moved to a reasonable profit level, you see us adjusting our stop loss. So a very quick one I will show to you here now. We look at it on this chart here. Okay, we look at it on this chart here. This is MT5. And now there are few features you need to understand on MT5. So number one is this quote. That is where, sorry about that. Okay, you see this quote. This quote here. So if you look at it, this is where the display of different currencies or pairs of currencies appears. Okay. Then other thing you will need to know about the MT5 is number two, where you can actually see the chart of each coin or each instrument. So if I tap on any of them like this, just tap once, it will pop up new order. That is, just want to place order. To check next chart, that is, you want to see the chart, the market, the candlestick, and everything about this instrument. So I click on this chart. You can see this chart here. Okay, so I click on it. So you can see it populates that particular instrument now, and the chart, the candlestick, all the pattern around that chart. Okay, that's exactly what you are doing. You want to see what is it going to do, what is it movement, and all the like. That's what you check about the chart. So now for me, can you see this market? So it's actually a downtrend. So we are not looking at this. So we can go back to those one. The one that was giving us profit. Okay, so you can see we're in profit on the one we actually want to enter. The one we enter wrongly, we are in negative. However, I'll close it eventually if whatever. But this is how you enter the trade. But other things you now need to understand in the MT5 section is, so the trade, this is the place you take trade. So when you tap on trade, now there's something you need to look up here. This plus sign. Sometimes it will show dollar sign. That's the place you actually touch to see instrument on instrument. If not, by default, there will be an instrument that was running before you came. If you just go, you won't be able to see how to, okay? As I tap on this plus, you see now it's just telling me to take trade on this instrument. So you have to check, is it the instrument I actually come to trade that is showing there? If that's not, you have to tap this dollar sign. So you have to tap it. So if I tap it now, it will now show other instrument. So that was what you saw. By default, the 20, well, 20 is on top, and that's what gave us an entry. And we entered, and that's why we are at loss right now. Right? You understand? So I have to now select which one I actually wanted to trade. So you now say flip 4, flip 2. So now on the flip 2, there are a few things I want to show you. This thing I want to show you here, you see this place in market execution. So that is like you want to enter a trade, right? You want to enter a trade at the market price, right? But there's a place that is very, very more important. That place that's very, very more important is what we call the volume or the lot size. And now let me quickly show you that. You see this place. So that's the place you change the lot size. That you increase or you decrease. Now, this is volatility. If you use a big lot size, you will blow your account faster because they are more volatile, right? They run faster than the normal forex currencies trading and all the like. So for that, that's why they have like nano lot size or whatever. So when you are doing, there's a video you can watch, or if you want to learn more detail about all of this, you can go to babypip.com to study and understand what lot size, how to calculate lot size. Now, so if you look at it, I'm using 0.01. If I want to increase it, I can just tap the next to it, tap again. If I want to be increasing by multiple of 0.1, that's here, 0.5, that's here. So if I want to now decrease it by those ones, can you see now? Till the last point, that's the lowest I can go. Or I can tap on it and clear it out and change it to my desired volume. Are you seeing it? And so that's how you change the lot size. As a beginner on synthetic, especially on well trade, you are using 0.01. Until you understand what you are doing more, then you can increase to 0.02, 0.03, especially on this flip 2, flip 1, all of those things. I hope I'm making sense. So now that's what determines the volume. So now to make order, you can do instant market order or to place order ahead. So if it's for buy, you want to buy, you say that market is still going to come down, then you want to use what we call buy limit, because you don't want to buy at the market price and it's long, you want to long, and you envisage that the market will still come down. So market is ahead of you, but you envisage a pullback of the market. That's why you say, okay, I am going to do limit order. For that, You will remove it from that point and tap this. Now, but there's something you must know. If you now put that limit order, you must be ready to put the price you envisage is going to come down to. And that's exactly what we are doing. Okay? Then if it's a sell too, you will see sell limit. Sell limit is that I'm going to buy at the price higher than the present price. So when market come back up, before it go down, I want to buy. I'm not buying this prevailing price. Front running it is that market is selling, but it has not gotten to your confirmation level. You don't say, until you get to my confirmation level, I'm not buying this price. That's when you use sell stop. That is front rolling it. So because that's your level of confirmation, that's why you're doing that. The same thing if it's buy, the market is at $1. You see, when you get to $2, that means it's going up. You are now saying what? Buy stop. And that's what you are doing then, and all of that. So there are other ones, but these are the four major, and then the market order. But you will be the one to set the price as it were. You can see then, once you have been able to do this, you make a purchase, and then you see the trade now running. So you can see that our flip 2, we are in profit. The one who made the mistake, it was a big mistake. So now our flip 2 is running. So when the trade is now running, you see you want to sell immediately, you can just close position. Then you want to put price, take profit, and then stop loss and all of that. Then you click on modify. You want to open a new order, you do the same thing. So if I go back to the chart now, look at the chart. So go to 15 minutes, you can see we actually want to enter somewhere down here earlier. Look at it. But because what we're trying to do, so we actually want to enter somewhere there. So, but what we're trying to do, we couldn't achieve that. And that was why we didn't enter early. If not, we would have been in somewhere from here. So by now, we'll have been much profit. And so we now said, if the market is going your direction very well, so the next thing you want to be doing, you see our stop loss is here. You can adjust it. That's what we call trailing stop loss. I can just tap on it. See? If I tap on it now, and now drag. If I drag now, I will have to now see where this arrow is here. Look at this arrow here. Right? So I will tap it. It will pop it up. I will now click modify. So it's easier. It saves me stress of struggling to. Are you see now my stop loss is adjusted up? When it has gone up very well, maybe you set two order and it has hit the first one have hit take profit. That's when we always say take stop loss above BE. So that means at that point you are moving this stop loss like this above this point. I'm not supposed to do this because the market can still correct down to that point. So, but nevertheless, for the purpose of this training, is why I'm doing all of this. So you can see now what I've done here is to break even. So even if the market crash back to entry again, it will only take me out, but I will still be in small profit. So you can see this guy is really going against us because it was not the right market I was supposed to enter to. Remember, we entered this market in error. Okay. Because you can see that the market is actually downtrend because creating a almost inverse head and shoulder. However, the market is still, let's say this way. Okay, so let's take trend line. Okay. So let's say this guy, if he can bounce from here, so if he does not, I'm going to close it, but that's a loss for me anyway. But it's one of those things we need to understand. Okay. So, but if you look at our trade, okay, you can see it's running up and down. But I actually don't want it to close my trade anyway. But nevertheless, remember this is an experiment. And the next trade I'm going to take will not run like this. Okay. So that's how you actually take trade. So I'm going to check another instrument now. And remember, I say as a beginner, don't trade too many instruments at a time. And then if you have small fund, there's some instruments you should not trade like Vol 80 and 99. They are quite fast, crazily volatile, so can give you issues. So you don't want to trade those ones with your little fund. Okay, so now let's go. So now let's quickly go to our trade. I'm going to do a proper setup for order of my instruments. So, but you have been able to identify how we actually take trade. So I have some setup before now. So I'm going to go there, right? I'm going to go to my setup right now. So I share my page to where I have a setup. Now, so this is an open chart. You see that this is an uptrend. And we see market move by contraction, right? Market move by contraction, all right? Expansion, a delivery. See this, this is, well, what is this? Okay, Flix 3. Now, flip 3, if I do something now, you will see, though this is not where we're going to stop. So you want to see where this guy will box out to and then deliver to. Just like what happened here. Okay, the breakout. So what do we now expect for this guy to do? So you expect this guy to, or this has gone up and then failed rally. So you expect this market to come down. So let me go to my chart. So let me go to my charts very quickly. Come on, this guy is giving me heavy loss. 1.3 already. Okay, so I'm going to go to my chart. I go to the drop down button, and so plain chart and drawing. That's what I save it with. You can save your own with. Remember the other one we just saved now. Remember I told you that your indicator is just to guide you on the momentum, perhaps. So ordinarily when I come in a day, I want to see a setup. Remember we said our setup, we probably check it on the daily time frame. So to see the bias of the market. Does that mean I cannot check it in a lower time frame? Why not? 1 hour, 4 hours, you can check. But it's more better to check it for daily first. Now, this market is bearish. Yeah, bias. This is flip 3. I should be looking for some short positions. Now, because even if you look at it, this is on daily time frame. Now, this is like not a key level, but an importance. So if I take my zone and I draw this here, so I probably, even if the market will not return back, so I'll take to this point. So even if the market will not return back here, but you expect that the market will return back here. Why? So this is an important area that was like a, call it resistance and support. So let's take it together this way. So fantastic. So this is already a sign of reversal. So I can be finding trade within this region. So let me go to 4 hours. So certainly I'm going to be shorting flip 3, right? So I'm going to be shorting flip 3. So if we won't take your RSI, you see when your RSI had what they call oversold already going down. So just to find, so you want to go to a lower time frame. So if you go to 1 hour, sometimes I like trade in 1 hour so that, okay. Now, so you can see now in 1 hour, the market is still getting supported at 50 moving average, and it's a very strong point of importance. So if I'm going to find a trade here, it's already 200 moving average. So let's go to our normal market entry. So 5 minutes. On 5 minutes, already tell you that the market is bearish, right? How do we know? So ordinarily from here, so this is like a double top, market wipe down. This is high, this is a low, this is a high. Now, so we need to break this. So can you see now? So I'm shorting. If you are watching me, I'm shorting. So if I'm shorting this guy, can pull back. So because sometimes you come late to some trade. So if I'm shorting from here, so I can take my stop loss above this or above this swing high. This is this is 429. So if you are using 0.01, just multiply 429 point multiply by 0.01, you get potential loss. Yeah, you're going to have if the market go against you. If I go by 1:2, let's look at it. Already 1:2 here. So then I can enter more positions, however, and set some at that 1:2, while I set some to this line I drew before. You understand? Remember, I said it's a key it's not a key level, but an area of importance that the market can go to and then return, right? Remember that? Okay, so let's go. So I'm shorting. So if you are with me, you're live on YouTube or Facebook. So I'm shorting that guy. My stop loss here. So that means I already know 4 times. So 429. So let's say 430. 430 multiplied by 0.01. So times 2. So if I enter 2 positions, that's about $8. So that is the trade against me, I'm losing $8. Then the first take profit, I said I'm going to take a 1:2, while the other one, I will allow it to run to that point. So let's look back to the market. We are still in a very big loss on that 20. So let's even look at that 20. So remember, as anything you do, you have to save. Okay, but before we do that, let's go. Okay, let me enter in another account. Let me enter in another account. That is flip 3. I want to enter in another account. Flip 3. So screen, open. Okay. So yes, let's go. Serious loss. I'm on serious loss on that 20. Okay, so flip 3. So flip 3. So let's go on flip 3. We are entering flip 3. Come on now. So flip 3. Remember, we said check before you execute trade and make sure it's changed to what you are looking for, 0.01. 0.01, flip 3, right? And I sell, right? I know that it's still going to pull back. So I checked, so we have entered 1. So if I don't want to waste too much time, ordinarily I should wait for it to pull back to enter another position. So we have said our stop loss will be above this immediate swing low, swing high, which is 125,500. 125,500. 125,500. So I'm going to look at my take profit as a 123,286. So you press and hold down and click modify 123,286. Modify. Now you stand by this. So if I want to enter another one, well, I have to now see the dimension at which the trade is going. So that means I can stack more positions. Okay, can stack in more positions. So if I know I'm going to go away, so I just add it straight away. And so I can decide not to put take profit on this, but I will put stop loss. So which is this, right? So the stop loss, right, can still be in the same point. I can make it 500 to know that $5, $5, $10. So 125,550, 122,500 as my stop loss. So this is it. So we have entered the trade. They should be running. So let's go on 15 minutes so that see where we put our stop loss. So let's go. Let's go on 4 hours to see where we put our take profit. Look at it down here. And so that's what it is. So you allow it to run. You have already agreed that this trade will either hit take profit or stop loss. So you don't give yourself unnecessary stress once you have make up your mind to find a trade and run what you're running. Right? So I'll go back. So, and I said one thing that once you are able to find a position, it better you settle down and monitor that trade than moving around to look for another addition. In that process that we lose all our stand, all what we're supposed to acquire, we get them off because we are too congested with multiple monitoring. You don't need that. So once you're able to get an opportunity and the trade is running, so it's better you nurture the trade than to try to put too many iron in the fire. And better still, remember, just because of this, I just quickly did that. If not, I take my time to look for opportunity that the setup is more superb for me and that I'm early. Right? You can see. So let's go to, so let's take them now one after the other. So I will say you have at least, I call it 5 fingers. Okay, so you can see a trade that I took here. I think this one was not. Okay, so I look for 5 fingers. Sometime when I wake up and then check my trade and check the one I need to pick. So let me look at flip 5. So when I see the one that have the best setup, that's what I jump into. Okay. Now, another thing most time we do is that a market that's already running on a direction and it pull back massively. So I now take Fibonacci retracement and drag to see an area. So I do a setting on my Fib retracement. So I uncheck this, and uncheck this. So minus 0.5. Then this one to minus. I remove the background and check it off. I'm okay. So remember, this is a downtrend, right? Yes, this is a downtrend. Hit up here, came down, pull back, came down, pull back, came down, pull back. So how do we know that this is a pullback? It's already, the sign is already showing. I want to get a confirmation after this. This is a golden zone. The market's going to go down more. So for me to now sell to this key level. Yes, and sometime even below that key level. So that's what Fibonacci retracement does for me. But I'm always concerned when the market gets to a major key level to know what it's going to do. Okay? So in that point, remember you have done this, and here you do this, that I have marked this region as an area to short the market. Take out this. So I go to a lower time frame, like 5 minutes. So shorting this, will it work? Now that's the question. So for the fact that the market was going down does not mean you cannot see counter entry. That's why when you go to lower time frame, you have to be careful, because this market opened today up here and change the structure. Of course, we say anything below 200 moving average, you should be looking for a short position. If I've short this market below here, I'll be targeting this point as my take profit. But after I got there, what did it do? It continued selling down, right? Now it pulled back massively. So here you go. After this pulling back, even now when you enable your RSI, you can see your RSI. What do you have here? Now, this is a little thing I'm going to teach you guys. You've been hearing about divergence. So we have bullish and bearish divergence. From 5-minute time frame, this market was having a what? A bullish divergence. How do you mean? Divergence means a contradiction in volumes and price actions. So here, the market was creating a lower low. Here, the RSI was creating a higher high. So that means there's a potential return ahead. And so that's what you had here. So this is a divergence, and this is the lowest it went. Then it came here, right? Came down. So this is the lowest. Remember your support and resistance strategy. So if we go this way now, that means I've pumped to this point and I got this. So now it has been supported nicely and then broke the structure here and reverse. So this is a confirmation. So, but you have to be careful too. I haven't seen this break of structure, then a confirmation you are in. When you are in, so maybe just a short entry, you are even targeting here. For me, I will be out from here. Anything towards the 200 moving average, I'll be out. Why? Because at that point, look at it. to my 200 moving average. The stop loss is here. You can see that it's a small entry, but you still have your 1:2. I'm out at this point. So now, this guy now is showing a sign of a pullback. Probably I may want to wait to go below 200 moving average. Even though the market for the day is biased, is bearish. So anything can happen, the market turn around. So, but obviously, at least by the time it crosses 250, you want to be shorting. But your fib retracement had already confirmed to you that this market had gotten to an area of importance, which is 50 fib level. Okay, so let's quickly take other instrument. Let's check our instrument back. 3, flip 3. We short it. Okay, still rigmaroling, struggling at that point. So we have not had edge over it. Okay. So let's look at the flip 2. I think we're buying or we're selling. Okay, we bought. Okay, so we are doing well on the flip 2. Can see you even came late, but nevertheless, so on flip 2 we're doing well. But the error we enter, error market. Let's look at our error market. Okay, error market as if maybe error markets like correcting back. Okay, our error market has given us profits. Let's look at it. Yeah, but that was not a trade I imagined to enter. That was, if you think that that's how trade is done, that means you are gambling. Okay. So error market, look at it. Okay, actually come here, consolidate up. So what should we do? Let me just close it and have my piece. We're negative back again. I want to close it and have my piece. Thank you. It may go well, but that's not the trade I plan to enter. Yes, that's what you need to know. Will it go well? Well, I don't know, because I've not even done any basic thing on it. Okay, so let's return back to this point. I want to have time to be able to monitor my trade and do needful. So, okay, error trade is, well, I've done well because see, this is another key level. Probably that's where to get to. They're rejected, right? Oh, this was a trade I entered many, many days ago. And then before I close it, it was a massive profit. Yes, with small stop loss. And that's what it is. So let's look at the flip 3 back. I think 3. Okay, the flip 3 is not a set. It's giving us negative. But remember, we put our stop loss. Whatever I want to happen, let it happen. That's exactly what you do so that you can rest. So flip 2 should be going well because we said to go up here. Have you seen what I'm just doing now? So this is flip 3, flip 2. So let's look at flip 5. I think we're trying to check that. We say it should be selling. Good. So and check now. So we go to 5 minutes. Have you seen it now? Go on 5 minutes now. It's even aligned with your 50 moving average. Should we find a trade? Yes, let's get a trade. I forgot to flip 5. So let's take a trade. Just because of this training is why I'm taking out this trade. So flip 5. Oh, was it flip 5? What's going on here? It's still showing. Oh no, we're in 15 minutes here. So let's short it now. 15. flip 5. So 5 minutes still above 200 moving average. So we have to be careful. However, we'll short and put stop loss. Our stop loss normal. Okay. So we'll short, flip 5, and then we're going to put our stop loss. So where should we put our stop loss? Above the fib levels. So now we have short. So let me just show you. So let's share page. Okay, so we short flip 5. I know somewhere there. So fib level 7 should be above there. 1:2. So funny enough, 1:2 is aligned to almost the key level down there. So 447. So that means our stop loss, we're targeting to lose $4 or $4.7. So, okay, so let me quickly do the short. Not the short, sorry, to do the stop loss. So I'm going to press, okay. So I think I need to close it here and show you. Okay. So here we go. You see the stop loss. $97264. 9764. Take profit 95920. 95920. Modify. Right? So that's what it is. So let's look at the flip 3. Ooh, flip 3 is massively, yeah, okay. It's returning back to the 50 or 200 before rejecting. So that's the place I told you that I was supposed to be adding position. All right, so let's pause here. We'll do the next training in another segment. For you? I, I as well. Yes, yes. Okay. Yeah, yes. Mm. Okay, 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 okay. Yeah, okay. Mm. Okay. Okay, so you can see now, so that So you can see now that this one is running. This our first trade is still running, right? Right. So that's how you set trade, right? That's how you set trade. You see, we have enter short and we put stop loss above there. We already calculated how much we will lose if the market is against us, and we have put our take profit. Okay, so those are the things you will learn over and again in in the 90 days challenge. So Dean of Forex will be doing a lot. So your own is to go to the link on the comment section, register, all right, so that you have free access. And the good side is that once you register and you fund your account, we equally have a group. We add all the people who have funded account with us. We have a group, we put them so where you can have access to interval signals. As you can see that our trade is still running. So very soon now it will hit take profit. So why I recommend that when you are trading, you should face one instrument per time so that you can monitor your progress and you can stack in new positions. Okay. So this our trade now is going our direction. We're in 40 something cent profit. So it's going our direction. Remember what made us to say, okay, we should enter the short. Remember that? Remember what I did? Do you remember? I think you should remember what I did. What I did was to check the trend of the market ordinarily. Okay, not this. We said this was going to come up because why? If I'm scalping that with indicator or not, I can trade both the trend and the counter trend, but you'll be conscious because look at it now. This is like a support. Remember our support style? It's like a what? A support. Okay? And like a triple bottom. So why? This is the market came down here. So you now, if you are scalping, that's why facing one instrument per time. So facing one instrument per time can be very, very distracting. So we know that this is a downtrend, so but you can still counter and enjoy your trade, right? Remember, I told you anything below 200 moving average, you should be looking for a short position, right? And when this market opened today, right? So we have a move up, change, right? So here, now, if I was here and I start trading this instrument from the beginning, so this is a kind of, you want this market to return back here, which it has done. So perhaps when you start moving this, you have already entered. So that means at this point, look at what will have happened. Long. So your stop loss is below here. Okay. So if you are measuring 1:2, already done here. If you are targeting this, so let's say 1:2, 1:2. So 1:2 is exactly at 50 moving average. Even if you do not use the stop loss too high, too much. So by now, 1:2 will have been here. So, but you want to target at least 50 or this, right? So targeting that point will give almost 1:3. That's about 195. So 195. So at this point, you probably may use maybe 0.03. So let's do the calculation. 0.03, right? So 0.0 or 0.05 multiplied by 195. That's $9, right? If you're an aggressive trader, you probably want to do 0.05 0.1, because these are flips. So 0.1, so 0.1 0.1 multiplied by 195. That's $19. And what's your stop loss? Your stop loss is 56, or let's say 57. So 57 multiplied by 0.1. 57 multiplied by 0.1. That is 5 point something dollars to make average of $19. Right? So you can see now, so probably you're expecting that the market should get up to this point, but you know that once this market gets up this point or fail to this, it will return back here. So you see where we said, you know, we have short and we are waiting for more. This is the play we're supposed to be adding new position. But remember, we have entered to position our stop loss here. Once it breaks this and it tests back to this point, I will add more position. Are you hearing me now? So that's if you are trading one instrument now, you make more money with less stress than trading too many instruments and struggling profit. Does not make sense. That's why I always counsel and advise people to focus, to discipline themselves in their trading activities so that you won't have too much stress in your trading. Trading is good, but you have to discipline yourself. Okay? So let's go. All right, you can see now all right, so once you see, okay, yeah, you can see this is a decline. So you want it to, maybe you may consolidate there, but being on your one position, you will have been. Okay, so let's look at our flip 2. So our flip 2 is still doing well. So let's look at the flip 5. I think we long equally or short. Okay, we short. Good. We short on flip 5. Okay, so let's check it now. Oh, funny enough, I even use 0.01. Okay, no problem. Not a bad deal. Okay, so you can see now, so we are in profit in both. Well, you don't do this often because it's just that. But and you can see when I say a trader don't have time to overtalk. A trader face his trade, but he had a lot to manage psychologically, and that's why I said the time of setup is different from the type of action or entry. So we have seen this. So let's go back to the flip 3 that we're supposed to be adding to positions. So we have gotten to, this is a neckline. So we have to be careful. Okay. This is a neckline, but this is a double bottom, consolidating with triple bottom, but we are below 50 moving average. So your take profit is here. You're expecting when the market come up here, looking for a short here or here. Remember, we have short already. So assuming you were in the market on time, you will have short here. You will have add here or here. You will have add here again. So maybe this one now will be like endangered species because it will have erased the profit to an extent. But after some time, it will go back to profit. Okay, so now so this is a full training, all right? So I'm sure if you pay attention to it, you will learn a whole lot of things. So the flip 20, you can see it's not going to go well. Remember what we talk about our support and resistance strategy. Haven't come down over here. We have seen what the market did here. You get it? So this is a resistance level. This fake out and return back to the zone. Now struggling. So if bad as it bad, you're going to have the market return down to this point or so. So, but can I go ahead and short? I don't normally dabble into the food that I didn't prepare with. So, but look at it, it's still an uptrend. So, but a strong pullback can happen. But remember, this is the high, this is a low. This is the low that created this. Until this is taken out, you can't consider anything so much. And you can now see that even this low is in consonant with 50 moving average. So which can come back there and bounce up. All right, so let's go to our deal. So 1 hour. So remember what I did from the beginning, right? Remember what I did from the beginning. So you can see what I was telling you. So if I check it, so let's go to 40. Those of us who have some more reasonable fund. Wow, so 40 in 40 have been going down. We expect it bounce here. Anything you do on your chart because of this is not a proper trading view. This is just a customized trading view for well trade. So any chart you set, make sure you save it. So the question you asked me, this is a downtrend. So if it's a downtrend, let's look at on 4-hour time frame or even daily to see the key levels. You can see that this market, come on, man, this guy. So let's look at daily time frame. So some of these things can drag you unnecessarily. Yeah, selling region. I think I gave this out when time. It's like triple top. So selling region. After this, a pullback, selling region. So, but it's approaching another point where it bounces. You saw it bounce here. You saw it bounce here. So another bounce can happen here. So sometimes you like trade this. Of course, if you want to trade, you can trade it, envisaging that this play may not be respected this time around until it comes down to this point. Okay? But for me, I wouldn't trade this type of market. I love market that have good allowance. So let's go to 60. I think this guy can be very choppy. I avoid choppy market. So when the market is not trending, I don't too much fancy them. I'm not a fan of choppy markets. Choppy market is not my deal. Yes, okay. Okay, so let's go. Let's go, guys. So I'll go to the 80. I say it's not for small account. Be careful. Does that mean you cannot find trade in choppy market? Why not? But it's not. They are not my thing. So I save myself from unnecessary stress. So this is bearish, but you can see now it's hanging on 50. But to come on day, you see where the market actually rejected from. Yeah. So take another move. This is daily time frame. So let's go on 4 hours to actually see a trend proper. So you can see this is okay. Sometime I can have it as like a channel. Okay. So this guy is already below 200 moving average. So which you expect a come down here. But before reaching that down, there's some liquidity level even here. So now let's go down to 1 hour. You can see, right? So if you had come time, I like coming to the market early, opening of the market give me good edge to have traded enough. So you can see it's closer to this point. Can I still find a trade? Why not? It's possible, but you probably will be struggling with such trade. Okay. So because market are approaching a particular region and be showing some signs. So let's look at your, yeah. So see the downtrend right from beginning of the day, right? So return back to 50 moving average and got rejected. So I like from a very rejecting area. So this one now, remember our support and resistance strategy. This is where an issue comes. Okay, so you can see it's rallying up. So if you rally, that means you want to find a rejection over here, which will be rejected here too, just as similar to this. Then you now be shorting. So let's look at 99, and then we'll check our trade. Okay, but the same thing we had here. Sometimes you can have a counter trend line. If I go on higher time frame, so easy. It's in between deep sea. So remember, I say whatever thing you do, you must save. If not, it won't be safe. So to sell down, once you break this, you sell down. Then again, remember I told you about this instrument. So so imagine you're already in 2 trade or 3 trade, and you find opportunity like you want to add. It's wrong. Stay with that one. That's why before I trade in a day, I normally take a sensor around all. Okay. Normally love to take a sensor around all the instruments to know the one I'm standing with. Know that I'm already running a trade, and it's as if I'm seeing another opportunity and I dabble in. It's wrong. Okay, so ladies and gentlemen, so far that's what we have to show you. So let's look at our 2. Oh, 2 had corrected. Oh my word. So we're not in to have taken some profits. So 5. The 5 is still running well for us. It's all right. So thank you very much. Do have a nice day.